You're tuned in. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our conversation about the grain market with what are futures looking like?
Well, we're in a time of weakness, as we approach fall harvest. Even if we were to get adjustments to the lower side for U.S. production, for corn, for soybeans in future USDA reports, still we have such a quantity coming of what we do have that we tend to see harvest lows. And of course, this puts farmers in the mode of either selling because of cash flow needs or storing for later sale in hopes of something better. And so we'll see it. But again, we're not in the majority of the state, not at harvest yet, but are getting ready to do so. And I think so we're hopeful for our Kansas farm clientele to have as good a harvest as possible, or as good a crop insurance payments as possible. Either way, we want them to do well financially, and so we'll see what happens. A month from now, basically by the time we get to the middle, moving a little bit beyond the middle of October, then a lot of harvest will be out, or will be on the latter half of it. We hope, we think, and we'll see what the tail of the combine yield monitors tell us as we go through the state for corn, for sorghum, for soybeans, and any other fall harvested crops.
And Dan, what are the cash markets currently doing across Kansas?
Well, they've weakened right along with the futures prices. The basis levels are certainly not as strong as they were just 3 months ago, earlier in the summer. You see corn cash prices at a low of 455 in Columbus area, and Topeka at 455. The high Garden City about 505. These are the main 6 locations that we follow all throughout these weeks. Again, Colby, Salina, Topeka, Garden City, Hutchinson, Columbus. Harvest price is just about the same. Again, we're in September, on the verge of harvest, so they're virtually the same. Still the same pattern holds up in terms of strength in some areas for sorghum prices. Again, cash price for sorghum, 525 in Hutchinson, 505 in Salina, and both of those are about 40 cents higher than the current corn prices. It's just a matter of quantity and enthusiasm at this point in time for grain sorghum purchases. And of course, grain sorghum purchases a lot of which go to China. Good for sorghum. It's having a good moment right now in terms of export demand. Soybeans, again, we had seen strong soybean prices, 13 plus, higher than that even during the height of concerns about where the crop is going at this time, given the attitude of the market as it sees USDA reports that we've had so far, and maybe not even yet anticipating the next ones. We're looking at a high of 1296 actually in southeast Kansas, Columbus area, 1289, Hutchinson, 1289 in Topeka, and then weakening to 1219, 1249 out in the western part of the state. And new crop bids just a little bit lower than that. Garden City, again, 1249, cash beans, 1240 for the new crop bids that are out there. Something interesting to watch. And for wheat, right during the time when farmers are going to make decisions to seed wheat or not, we're seeing this weakness now in the cash markets. The current cash bids running at I guess a high of 691 in Salina, at 686 in Topeka, 691 in Hutchinson. Other prices lower than that. New crop bids for next year is really where people's attention probably is more so, and those are kind of they're ranging from 649 on the low side out in northwest Kansas and Columbus, excuse me, in Colby, up to a high of 679 actually in Topeka. So you've got that, and also farmers are considering moisture, etc. Uh, and as you stated before we came on the air, what a turn now in the very southwest corner of the state, which had been for a period of years just horribly dry. Now suddenly they've been catching moisture, so that's a factor on the to consider for wheat seedings. Also, you have the crop insurance price that is finally closed now. That discovery period running from August 15th to September 14th for the 2024 hard red winter wheat contract ended up with a price of 734. At this time last year, we had a price of 879. Farmers, if their reference price is last year's price of 879, and now they're sitting about a dollar 35 or 45 lower than that, that's I would say it's discouraging, but it's not as quite as profitable. Again, Southwest, they do have moisture, so that's good. Other parts of the state don't have as much, particularly the central part of the state where we have quite a bit of wheat seeding. So be interesting to see where things go. In terms of wheat seeding coming up, I guess the standard train of thought is that crop rotations and moisture have as much to do with whether we seed wheat as does the and the crop insurance price, as does current cash markets. That said, though, we're seeing some things happen that aren't encouraging wheat seeding quite as much as we would hope to see if you're cheering for strong acreage in the state of Kansas.
And talking about some unfavorable conditions kind of for hard red winter wheat basis in western Kansas.
Yes, we try to follow again these same particular locations on the basis levels, and it's just telling that uh, in the eastern 2/3 of the state, again the central corridor and the eastern corridor, basically in essence basis levels for wheat have fallen pretty much to their recent 3-year average, a little better than that in Columbus, but almost right on in Topeka, Salina, Hutchinson. But when you go out to the western part of the state, we've seen a break of well, compared to the 3-year average, we're uh, uh, about 40 or so cents below that right now in the Colby area, and in the Wright area down southwest Kansas, you're looking at about 20 or 30 cents lower. So just some weakness at this time, and nothing that couldn't be solved by great export demand. But that's been our bugaboo. We just haven't had that. And we're kind of focusing a lot on domestic in our discussions right now, but gracious sakes, the strong movement of wheat out of Russia, out of the Black Sea region, now open somewhat more open corridors for wheat to move out of Ukraine through Europe are a real burden on us, as well as the U.S. dollar. I don't think that can last forever, though. We have El Nino is having dramatic effects projected to have even worse effects on Australia. That would affect their wheat production. You have various issues around the world that are at play on the wheat side. Canada not doing just wonderfully in terms of battling dry conditions, and so I don't think that forever and ever we'll be seeing this current situation, but right now, given what's right in front of us, given what the market is perceiving, uh, you're you're looking at a situation where there's just not a lot of enthusiasm recognized by the wheat market. I I guess I'm just an old bitter clinger to supply demand fundamentals, and with that, gracious, the world stocks to use for wheat are tight. They've never, almost never ever been this tight in terms of world stocks to use, world minus China stocks to use. And what turns that around? Well, when the supplies that are supposedly out there are so tight that buyers have to start bidding up cash prices out in these markets. And when that occurs, then we'll see the market respond. But it's just really unfortunate timing right now in the state of Kansas, as we're just about to seed hardwood winter wheat, to see the weakness that we have in basis in some of these western Kansas areas.
And lack of moisture has been a big thing for many parts of Kansas. However, hasn't only been an issue for Kansas, but also states around us.
Yes, um, when you look at the U.S. overall, pardon me, you've got, excuse me a second, as of September 19th, you have 58% of the U.S. corn crop in drought, and that situation brings to mind what the next USDA report might bring for U.S. yields and production. Again, we have high enough acres that we're insulated a little bit on that, but who would be surprised given continued dry conditions in the way that we had such sharp hot drought at the end of that marketing year that we either stay at 173.5 bushels per acre or drop to, again, another one plus bushels down to 172 or thereabouts. Really, that would surprise no one. And frankly, the October report coming up will give us more hard evidence. It'll be just on the cusp of harvest, or harvest will have already started. So you got have that situation. And the since we're talking about corn, when you look at the states that are the driest, of course, well, the one that's showing a lot of drought that we don't think much of as vulnerable is Iowa. 98% of Iowa is showing some type of drought. Minnesota, 100%. Wisconsin, 89%. Louisiana, not a big corn state, but 100% in drought there. Other places that are pretty important: Nebraska, 71% of the state showing some type of drought. And Indiana, 44%. Illinois at 33. So maybe the old adage that traders bid what they see outside their window, or now we have to add in what they see outside their off of their when they lift up their eyes from their computer screen outside their house. If they're all located in Illinois, they don't think things are that bad. but so right, I guess if there's a time of volatility coming up, it'll be in about 2 weeks when we come to that next USDA crop production report, and then we'll have more pardon me, hard data to look at and go from there. And what we see for corn is one aspect of it. What we see for soybeans is even more so of a concern. The again, Iowa, 97% drought, Minnesota, 100% drought for soybeans in terms of soybean production. Kansas, 80. We're only at 80%. Then Illinois at again 27% on the low side. Indiana, 45. Missouri at 60. So a lot of states have a lot of drought that they're dealing with, and so in the midst of our lower prices right now, there is that issue of the October crop report that'll be coming out around the 9th, 10th, 11th, and when that comes about, we'll see there's a likelihood of some volatility in the markets. The exact date on that actually will be October the 12th. So stay tuned, I guess, for that. In the meantime, we'll be harvesting and waiting and trying to make decisions on either I shouldn't say forced sales, but cash flow driven current sales at low prices, or do we hold for some period of time and try to benefit from storage.
Dan, I appreciate you taking the time to join us once again and give us a grain market update.
Shelby, thank you very much. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.